This is the Think Podcast for entrepreneurs, business owners, and real estate professionals. Insight, real talk, systems that scale. Think about it. This podcast is brought to you by Real Property Management, the largest single-family rental residence management franchise in North America. We help you protect your investment, minimize your costs, and maximize your income. Visit realpropertymgt.com to learn more.
Thank you so much for joining in today. I'm really excited today because we have a very special guest, good friend of mine. And I keep getting these questions all the time about what's going on in the conventional market and what is the best way to take a DSCR loan and bump it out into a conventional lending type of deal. So our special guest today is Tom Ulrich with Rate.com. And I've even got one of these cool coffee cups here. If you ever get to see Tom in person, ask him for a coffee cup, because I'm telling you guys, these are the best coffee cups in the business. Rate's awesome for what they do in finance too, but the coffee cups, that's where it's at. So Tom, Tom's been in the business a long time. He's a good friend. We're going to have fun today on this, but give us a little bit about your background, the listeners, so that they know a little bit more about you and how long you've been in this business, and kind of the stronghold you have on educating people really about how to get a conventional loan or a DSCR loan.
I've been doing this 20 years, and I've worked at different lenders, and I've dealt with a lot of different types of customers through the years. And people have been going for conventional loans as investment properties. Now the trend is with investments. A lot of people are now doing the DSCR loans. And, it's a great tool for investors. It's allowing investors to get in there to qualify with just the rental income piece, okay? And what I mean by that is when you are purchasing a home as an investor, you used to have to qualify with income as far as self-employed income or your salary income. Now, the DSCR loans are allowing you to qualify with just rental. So you have to have rental income that will allow you over the PITI, principal, interest, taxes, insurance. So if your full payment of PITI and your rental income is 100% even, so if the payment's $3,000 and your rental income is $3,000, that will allow you to do a DSCR loan, and you qualify with that, with not using any income to qualify.
Right. So you can get deals that basically on DSCR, for the investors that are listening to this, they're always trying to figure out, how do you get the biggest class, the cheapest peer, right? So meaning, where's the floor on that? Because some lenders are at 1.25, 1.35, 1.1, or one even. There's some lenders out there that'll do, I think it's a little bit dicier, riskier, obviously, to do a negative DSCR equation. But, the other question too that I got, and I talked to a guy this morning about this, as a matter of fact. I gave you a scenario. Let's run this by, and you can give advice to this better than anybody. But the guy had bought a couple rental properties, wants to change school districts, changing jobs, and one of his rental properties, they're going to sell the house, the owner-occupied dwelling that they live in now, and they're going to move into the rental property because, as you know, with a DSCR loan, you can't be owner occupied. Yeah, so he called me today and said, "Hey, today I want you to ask Tom. I need the advice on how to go from changing that DSCR, because he's past his prepay now. He had a 2-year or 3-year prepay, into how he could qualify to move into that house." And I said, "Well, I think it's a standard mortgage, but I'll ask Tom."
Yep.
And so talk about, because there's a lot of people that are looking to do that, where they're downsizing and to get into that. So let's get into that a little bit. What's your best advice on that for people that are looking to get ready to borrow money again?
So if a customer's looking to sell their owner occupied, now move into the DSCR, they have to do a refinance, because you can't live in the DSCR product, because that's an investment property. So what they could do is, out of the gate, first look at a conventional loan, see if they qualify, review all their assets, review their income. If they're self-employed, get the history, 2-year period or 1-year period, depending on how long they're there for, how long they're owning their own business. And then there's other options. If conventional doesn't always work, there is other products out there that will help people that kind of are doing the DSCR loans. You can do bank statement loans. You can do asset depletion loans. So there is other options besides the conventional piece to qualify that are out of the box, as long as you have the equity.
Sure. So let's talk about a bank state.
20%,
Yeah, let's
30%.
talk about a bank statement loan.
Yep.
What would be your tips for somebody that's getting ready to flex and it's an entrepreneur guy owns a lawn care business, or he's a roofer or whatever.
Yep.
What are the minimum requirements for somebody to come in like that that's self-employed? Because we deal with a lot of those people here, I think.
So we review their bank statements over 12 months or 24, and then we divide it by a certain number, depending on which product we choose, and that will be the income we can use. We're going to go look at the deposits over those 12 or 24 months, and that will be the income that we can use to qualify. So that will help them if they don't show income on their returns and can't go conventional. We can do a bank statement loan to help them with the asset depletions.
So with a bank statement loan, is credit really a consideration? Or, I mean, are you guys looking at FICO scores? Are there FICO floors, as we know in the business?
No, yep. There is a sorry about that. There is a credit requirement. You still have to, you still always have to credit qualify for loans. You still have to show your assets. When you're leaving the DSCR, now you have to show your income. There's an income piece that has to be met to facilitate the loan. So you can't avoid the credit. Like if your credit's not up to par, and every product has different standards on credit scores. So it's a wide range to say, hey, you need a certain credit score for this to qualify. There's a big range of different buckets that they fit in, and that's why it's always good to have them call the loan officer, me hopefully, and discuss what the scenario is, and that's where I come back to them and explain what this all could look like.
Yeah, because I always tell people too, I'm like, listen, there's no sense in going out and shopping for a house if you don't know if you even have the ability to qualify, right? So, a lot of people don't want to go and do that up front, but I think that, I mean, as you and I have always talked, isn't that the best case is to really kind of get in to find out what direction you're going to go, because everybody's like, at Golden Corral, get their eyes bigger than their stomach, right? And they go get 3 plates of food. And so people are shopping for houses that are really never going to become a reality. So what's your suggestion on getting somebody, if it's a young couple, old couple, if they're looking you know, to take out a mortgage? Because we're going to, after this question, we're going to get into what's going on in the current mortgage rates, and everybody's like up and down and all this other stuff. But what would be your best advice for people that are getting ready to prepare to get ready to buy a house? Because there's like a list of 5 or 6 things that are a minimum, or what's an automatic deal killer that you're like, listen, you're gonna need another year before you're ready to buy a house.
Yeah, so I've been doing this for a long time, right? I talk to realtors. That's my referral sources out there. So why they use me so much is I'm very detailed, right? So when a customer comes to me, I'm not issuing a pre-approval unless I review their credit, their bank statements, and their assets. I'm not going to ask for a 1 year W-2 and one pay stub. I'm going to ask for 2 pay stubs, 2 W-2s, and 2 months worth of bank statements. Okay. My reputation is always on the line. If I issue a pre-approval to anybody out in the street that is showing a home with a realtor and I can't do the loan, once they find a house and they go to contract, my reputation is so important, these people will never want to use me again. So what I always tell my referral sources, I'm batting 100%. Okay. What that means is anytime you see my name on that letter or you hear from me, that means I reviewed everything in the system. I ran it through desktop underwriting. These guys are ready to go. And if there's anything that I see that's a red flag, I will let you know and discuss that with you that this could possibly happen. But if you have that pre-approval in your hands that has my name on it, that means I've reviewed everything possible to get it done. And that's what
Yeah.
rate comes into play. And rate will allow me to close loans in literally 2 or 3 weeks. Now, is that a guarantee on every deal? No. But I'm literally closing loans in 2 or 3 weeks these days. And it's because of the upfront process that I do to the customers is I make sure that they're vetted and everything is correctly looked at. Or if there's some red flags, something I need to look at, I will get it in front of an underwriter within 24 or 48 hours to make sure that this deal is going to happen. So I don't waste the realtor's time out there. And that's why I'm so heavily driven out there with realtors sending me business, because they know that if my name, they know if they send it to me, this is actually going to happen.
Well, yeah, we talked the other day too about the new, because one of the things we're doing here to think is that the educational program for the realtors, right, to be able to start focusing strictly with investment
Yep.
buyers, right? There's a lot of guys that are buying investment rental properties, especially down here in Florida at the moment, because it's it's easy to do. You can do both those conventional and the DSCR. But how many realtors would you say that you're talking to? Because you're taking that program out as well to educate these realtors to open their horizons a little bit, right?
Yep.
What 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 are something? What's a piece of advice that you could give to our realtor listeners here that is they're talking to these investor buyers and the people that they're working with, because a guy will call from Pennsylvania or New Jersey or Long Island or wherever and say, hey, listen, we want to start picking up some rental properties below the Sun Belt for long-term, short-term rentals. What's some of the advice that you're telling these realtors to really start to be able to be attractive to gaining those clients?
Well, when they're talking to these clients as far as investment properties, you always got to find out if they're an investor or not, because a lot of people want to be an investor.
That's
If
right.
they don't have the down payment, they think they could buy a house for 5 or 10% as an investment property. You have to do 20% down. Okay. So these products are needed to be with 20% down. So that's always where I talk to the realtor and explain that to them and clean out a little bit that people want to be a wannabe or a potential investor. They have to get the assets ready to go to buy an investment property. So I always
Sure.
tell realtors, ask those questions up front before you start showing houses that are potentially going to be an investment property. And that's kind of where I come into play is I tell the realtor, hey, listen, I get it. Show them 1 or 2 houses, build a rapport, you know, get to know them. And then after 1 or 2 houses, you definitely want them to speak to me to make sure this can actually happen during the process of the purchase contract.
Well, and so let's jump over now to appraisals, right? Because in my business over the years, it's you're always waiting on third party, right? And so we've definitely chewed some of the same dirt. We were talking about this the other day about a good appraiser that works quickly can save a deal, just like a bad appraiser that doesn't engage quickly or whatever, because these are timed contracts, right? I
Yep.
love the fact that you're listen. I don't know if you guys are picking up on how many emails he's getting. how many how many people are trying to get a hold of him already this morning, but his email box is just going ding 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 ding. So that should tell you something about Tom right here, about his level of reputation in the business. But back on the appraiser thing, how is it that because you do so many loans, right? And you're successful that way because you won't issue a term sheet unless you know. But there's always that unknown thing out there, right? It's always the unknown about the appraisal. It's the one unknown,
Yep.
because we can look at Zillow and all the third party valuation, open source data information spots and stuff like this, but sometimes they don't come in, or timing or whatever. Give some of our guys out here that are listening your best advice on how to deal with the appraisal game, because it's a game, right?
Yep.
Um, how do you best deal with that, and how do you set the expectation with not only your client but the appraiser to not only uh, cover speed quickly, but to ensure that that's not a pipe dream on value?
Yep. So any advice I can give a realtor at this point, in anytime an appraisal is ordered and scheduled, I'm hearing a lot of times that the realtor's not going to the appraisal appointment.
Are you serious?
Yeah, no, it's happening very often. They're just, yeah, it's a lockbox. So here's the code. Take your time out. Go to the appraisal. Bring the comps in. Bring it to the appraiser. He'll appreciate that you did the homework, and explain to him why you found these comps and what you think. He's going to use what he thinks is right. But if you put the effort in and hand over some comps to the appraiser, that's definitely going to help the situation where if the value is the purchase price is A and he didn't meet you, he may not know about 2 or 3 comps in the area or understand 2 or 3 houses in the area that's sold for a certain price. You may have a better understanding of it, and that's why you go there and you meet and greet him and give him some comps for that day to make his day easier, and he'll
You don't
appreciate
you
it.
don't think that the appraiser would be like, yeah, yeah, I got it?
Sometimes they do. Sometimes they do.
Hmm.
But most of these guys appreciate it. They're doing 5, 6, 7, 8 appraisals a day. If they're literally, if they do 7 appraisals a day, they're only meeting 2 realtors out of the 7, I bet, at this point. Most people are not going to the appraisals anymore.
Wow.
Yep.
I mean,
So
it's
that's one
become
advice I would
yeah,
give.
it's like everybody's kind of phoning stuff in lately, right? So another question I got, when I was talking to a friend of ours that knew that you were going to be on today, and he's like, listen, to the best of his ability, have Tom understand kind of what rate expectations are going to be, because you'll watch CNBC, they say one thing, you watch Fox News, they say something else, you watch CBS, NBC, yabba dabba do, it all comes through, and the rates are jumping all over, and speculations are going up, down, sideways, and every which way. You've been doing this for 2 decades or longer.
Yeah.
What are you seeing out the window? And I know that's a broad brush, and I'm
Yeah.
not trying to trying to
Yeah.
stick you up or hang you up on anything, but just in your advice or whatever for the reality of what people can expect from
Yeah.
your seat, lay a little knowledge on everybody.
So yeah, I get this question probably every day starting at 8 a.m. or 9 a.m. Are the rates dropping? Are the rates going? What's going to happen in 3 months? What's going to happen in 12 months? And I say silly things like, oh, if I knew, I'd be able to, I'd be on TV telling everybody, right? You just, rates, it's a very sensitive subject, right? So whenever I do these kind of podcasts, I can't tell you what the rates are, right? Because I got to be very cautious because every rate is going to be different in transactions.
Well, yeah,
Um,
and then people could watch this 3 months from now too, right? You know what I
Correct,
mean? Yeah.
correct.
Mhm.
The hope is the rates are going to drop, right?
You think
But
they're going to drop? You think they're going to drop lower again?
that's the hope. That's what everybody's talking about, with the stuff and stuff that's going on right now. I don't see it happening tomorrow. I don't know if it's going to happen mid-year, but the forecast and everybody's saying it's coming. It's just when, we don't know. It could be 2 years away. It could be 6 months away. It would be an answer if I said to you it's 6 months away, that'd be very unprofessional because we just can't put that out there. We just don't know. But what I do tell my customers is understand this. If rates drop a whole point of what it is today, right? I gotta be cautious of what rates I say is today and what it could be. But let's say rates drop back to COVID time, right? What's that going to do to house values, right? So people that are on the fence and like, I'm going to wait until the rates drop. Well, you may buy a house for 700,000 today. And if you wait 12 months from now and rates drop to record lows again or mid record lows, that house may be worth 800,000. Who knows, right? So I would say, when it's time to buy as a first time home buyer or an investor and it's a good deal, go do it now, and you can always refinance at a later date. I mean, that's easy. Refinances are I do tons of them. So
Well, yeah,
rate,
because well,
I look
no,
at
go
the
ahead, go
payment.
ahead.
Does the payment make sense? Go with it. At some point rates will drop. I just don't know when. And you can, talk to the loan officer, which is hopefully me. We can discuss, hey, this is the payment at this rate. And if the rate does drop like this in a year or two, you may save $500 or $750, but don't rely on that. Understand that this could be long term. I don't know, but all forecasts and all predictions are rates are going to drop soon, but as soon 2 years or soon 6 months.
Sure. Well, I mean, I remember when I bought my first place in Southern California, right? I had at that time, epic credit, right?
Yep.
A lot of money in the bank, had time in the job. I mean, I could have gotten bought anything that I wanted. I mean, so I was A paper all the way across the board. And at that time, I think my rate was 7.95, right? That was
Right.
a smoking rate back then. I mean, this is 100 years ago. And I think we had a black and white TV and a gas stove. But what I'm saying is, if you look at the rates where they were during COVID times, I don't personally think, and I say this every time, that anybody asks me, the rates will never get back to where those rates are now. Or, those people that are holding those 2% and 3% mortgages, it's
Yep.
never going to happen again. I don't see it.
I,
If it does, I'll eat my hat on a live podcast. You guys can all come and watch. I'll do it with mustard, and I'll do it live. I think that I think the comparison between DSCR rates right now and long-term conventional rates are pretty, I mean, they're pretty competitive, right? And you can make money in both ways. I also agree with you. All these people are like, "Oh, I'm going to wait till next year." Waiting is never a good thing. I think you just have to be with action and go forward, get it done, um, and then you start to pivot later on with other things. Um, I'll ask you a couple of softball questions here, and this is just theory, right? How many people do you still think are self-migrating and purchasing houses down south? I mean, we're both, I came out from other states, but I'm from Michigan originally, and you're up from Long Island originally, and so a lot of people are coming below the Sun Belt. Are you still seeing heavy traffic coming south and people looking for those loans? Because you work all up and down, you work everywhere, but are you still seeing people coming down and buying investment in occupied houses down here?
Yeah, I'm still seeing a lot of activity. I talk to a lot of realtors in different states, especially down south these days. I'm seeing a lot of people all around the country still moving down in the warmer climates. Obviously, it's not as warm as we like right now, but
It's cold today.
it's people are still coming down. They're hearing about different things that that the break on tax and whatnot. So people are still looking for the move. They're looking to change. So yeah, no, I'm not seeing it slowing down at all. I'm actually
I,
seeing
I'm not either. I'm not
I'm
either.
seeing an influx of people starting to come down more. So it's an interesting dynamic that's happening.
Question on insurance. Got a text the other day, wondering if the insurance costs down here, down south, especially in Florida, um, is prohibitive to actually completing transactions. Are you finding that that's a sticking point or a hook point that kills deals is the cost of insurance?
Yeah, no, I'm not seeing it killing deals. It depends where you are around the country, right? Insurance is different in every state. So
Hmm.
people coming from, let's say, New York to Florida, they're used to their insurance policies being high. Some other states are used to being a little cheaper. So that's one thing that's like a sticker shock for people when they go down south is the policies. And it all depends where you live in Florida or other states, right? If you live closer to the coastal line, you're gonna have to pay flood insurance. You're gonna have to pay homeowners insurance. So it really all depends where you're moving in the area. Obviously, hurricanes and stuff affect certain areas. The winters affect certain areas. So when people are moving, migrating down south, it just all depends where you're coming from. Some people are just used to paying a premium on insurance in certain locations. So
Okay.
when you come to Florida, some people are used to it, and some people are like, wow, it's double from what I'm used to, or triple sometimes. But it's not affecting them from moving. They're moving for a different lifestyle. And a lot of these people are moving from areas where they're selling their house for so much more equity than they thought they had, and
Right.
they're able to move down south and have a different lifestyle and have less of a mortgage and the payments less. So that's really why they're coming down here, is that the financial change for them.
I think so. I mean, look, we did it. I had two more questions for you before we wrap up here. One is, um, you've seen a bazillion loans come across your desk in every shape or form or fashion over the last 20 years. And so give me top three underwriting red flags where you look at something and you're like, yeah, this one's going to be a heavy lift, man. What's a top three underwriting red flags so that anybody listening to this would go, either I fit in that box or I don't.
Well, I don't want to call them red flags, right? Self-employed borrowers are the most trickiest to try to
Okay.
understand what they're doing.
So
The
here, listen to that, everybody. If you're self-employed, okay.
it's the trickiest thing because you really have to give the loan officer a little time to look at it, understand it, and that's why there's other options for those types of borrowers depending on what they put down.
Hmm.
So that's that. I don't want to call that a red flag because it's not a red flag, but those always take more time to review. So like my turn times on pre-approvals are with salary borrowers are within that day, 24 hours. I can finish it up as long as I'm available during that time.
And they give you everything that you asked for like a complete
Correct.
underwriting. Okay.
I always have this saying, I'm as good as the customer, right? If the
Right.
customer gives me everything, I'm going to work very quickly. I'm going to get things done. But if the customer gives me a pay stub here and bank statement 2 days later and a W-2 2 days later, I'm only as good as the customer. It's going to take me 5 days to finish that up.
Sure.
So
Sure.
let's say the self-employed borrowers are the most difficult, and it's not a red flag. It's just the most difficult. Other ones is the assets. Okay, when there's large deposits, that has to be addressed. That has to be explained. So that kind of turns into a red flag. And we
Yeah.
have to have a better understanding of what's going on there because in the mortgage world, everybody thinks that they're going to be able to not show everything and underwriter is like an FBI agent. They find everything. There's nothing they're not going to find in the file.
They always
They
do.
are they are going to understand you and your income, your assets, and without even speaking to you, they know everything that's going on. And that's where I come into play. That's where I look at all this stuff. I think of an underwriter. I am thinking of an underwriter before it gets to underwriting. I'm not shy away from asking for a letter of explanation about those deposits or a letter of explanation about your job history. So that's what makes me good is
When,
when it goes to an underwriter. When it goes to an underwriter, I've already asked for these items that I think the underwriters are going
right.
to be asking for because they will ask for it.
Well, let me ask you this: do letters of explanation really work, or is that just kind of a lending fairy tale? If you write a good letter, we can explain it away. Do
Well,
they
it's
do
not.
they actually work? Do they move the needle?
It's not that it will work or not, but you got to understand the underwriter is looking at a file where they don't know the customer,
Sure.
and they want to hear from the customer of what it is.
Okay.
Let's say they have had 4 salary jobs over a 3-year period or 2-year period. It's better to put an explanation to the underwriter to explain that process of what went on for the last 2 years. Did you just bounce job to job, or did you go from position to a higher position to a better position to a more salary? So that's where that comes into play.
Okay.
But
So
then, and
folks,
then
get ready to have to explain some stuff, right? So
yeah,
get
that's just
yeah.
part of the process, and that's where I
Yep.
come to play to make it easy. That's what I do for a living, to
Yep.
make this process as smooth as possible, and not to be shy to ask me every question. I've been doing this long enough where I've heard it all. So you're not supposed to be shy with me. You're supposed to ask me every question possible. So when you get to the closing table, you feel good, you're excited, and you're relieved.
Cool. And then lastly, how do they get a hold of you, man? Because, I'm a big fan of you. I think I can tell you folks, I've known him a long time. He is straight as they come. He'll tell it to you. It'll be a quick no, a quick yes, and he will educate you throughout the process. And at times I've seen him talk people off the ledge. He still gets it done. So how do they get a hold of you, Tom?
Well, I can give you my cell phone number.
Hmm.
That is going to be 631-905-2649. So you can shoot me an email, call me, send me a quick text. We can chat, we can discuss, and I will be able to help you get to either your primary home, your investment home, or just chat about the mortgage business. I'm here for the discussion.
That's awesome, man. Thank you so much for coming on today. I mean, we sit and talk about this stuff for we've only got limited time here, but I could talk to you all day long about this. And so, folks, if you want to be able to really know what both sides of the fence look like, and for you realtors out there that are looking to really kind of start to open up your horizons, Tom is a great resource across so many states to be able to tell you how to market to those people and how to make it as appealing as possible to start to draw in new clients for you guys to open up your business as well. He's a real true partner, both strategically and I'm sure you'll become a good friend with him. So thanks for tuning in today, Tom. Thank you for the time because I know your computer. I heard it going ding 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 ding. So so I know you got a lot of work to get back to, but thanks so much, and we will see you next time on the Think Realty podcast.
Thank you.
Thanks. Thanks.